Welcome everybody to Kingmaker FX. I'm going to teach you a reversal strategy, a strategy which you use for reversal to catch good reversal. This strategy is almost 90% accurate. So let's go straight to the charts. So market was an uptrend, but mini uptrend actually, but you know the overall trend is still down on the daily time frame. So where are we expecting to sell? We're expecting to sell at this supply zone here created before the push down, and this is a flip zone actually, because demand failed and supply took over to push this market to the downside here. So what did we do? When market pulled into this zone, we went to the M15 time frame. So this is our zone here. We'll mark the last high, and this is the last high. This is our zone actually, last high. So what do we expect? Markets should pull into this last high and continue buying. So market came, break it, a change of character, break another high, a BMS now. A BMS is confirmed. So what do? We just place our, what do you call it? There are two zones you can sell from. This zone, but normally this zone 90% of the time don't hold. You don't hold 90% of the time. This will be used as inducement for this one here. So even though you are selling here, your stop loss could be above that zone there. Your stop loss will be what? Above that zone there. So where will be your TP? Your TP is on the H4 time frame. Your first TP is this demand zone here. Your second TP is this demand zone. You can see when price hit the first TP, it reacted like that. So that's the simple trade here. On the lower time frame, I went to the M15. Time frame. So, and look at what was happening inside my POI. You can see here, we marked the POI, a Wyckoff schematic. Let me just break it in simpler terms. So, this was the last prominent high that caused. So, what we expected is that when market entered this, come back to this high to buy. So, we came back and break two highs. So, we have a what? Change of character and our BMS. We can't take our sell. So we took a sell was from this supply zone here. So surplus available. The main sell was from this supply zone here. So when we enter our POI, when we see this, we know that it's surely to really sell. So just a simple trade. Enter a POI, a change of character, break of structure, because these here are all demand zone. Welcome to the second trade recap. This one we took it on step index to clear this high. Now you can see the market is in an option already. So the market will go down to the lower time frame. You see this market is buying to continue the normal trend. You can see it in that my screenshot before. So actually we miss this buy. No need to panic. No need to panic. You wait for a re-entry. Let me zoom in properly. Now, what do you see here? Order block. There are many other blocks on the way here. Why did we choose this one here actually? Now, this one caused a break of structure. This one, you have like three other blocks here. So why did we choose this one? We think differently in the market. What do you see here? Anytime you see two POI close to each other, most times that, from my experience, the first POI will be used as inducement for the second one. Now look at what I'm seeing here. Equal lows. When market pull into this POI and bought, just imagine what will happen. People will be buying from here, putting their stop loss below here. So from our experience as smart money traders, we waited for this one to play out. When he was buying, we didn't panic and fly into this place. So we waited. And I could see equal lows were created before this POI. So validating this POI as what? The main period I'll buy from, because now we have what? Liquidity or inducement before it. So let me draw the POI. This is a H1 order block. You can see it there. H1 order block. So You could enter like that again, but when price pulled into the order block, it also gives us another indication. Another what? Indication. Let's go down to lower time frame and break it into pieces. Okay, so now price in your POI. You can see equal lows. Price broke down equal lows. So what will you be marking? Your last prominent high. So for a change of, if you want to go for confirmatory entry again, you can enter like that. If you want to make your stop loss more smaller, your last this thing. So now you are looking for what a change of character with BMS. So market came, reacted to this zone, came down. We are expecting what price to keep going down. Market would break it. We have a what change of character, BMS. Now, where was the last point that caused that break? This whole zone here. You could see this candle, or you could see this whole zone here is a flip zone. This whole zone is now your flip zone, the zone that caused the break. The zone that caused the break. But if you are refining the zone, you can just carry your Fibonacci, and like this, you enter below the 50%. So your entry is here. Your stop loss will be now below what here. You see your stop loss is now smaller. Let me zoom out. Let me show you something. If you're entering from the zone exactly, let me stop loss be okay. Okay, 8 pip stop loss. 8 pip stop loss. Okay, if you're entering from the zone now, let's see your stop loss now. Okay, 6.1, which is now smaller. And with this entry here, I've gotten a more confirmatory entry. Where will be your target? This high here. This high is your target. This higher target. That's your target. First TP and second TP. So that's all. You look for what? An order block. Order block here. We choose order block because there was what? This one served as inducement. And this equal low say before order block made us sure that this thing we buy. We didn't panic. We waited for this to play out. Look at it here. Beautiful trade. For account management, mentorship, and signals, DM me on WhatsApp.